Harmonix is a venture capital firm investing in healthcare, life sciences, and deep technology. Our fund one was a proof of concept fund that I self-financed. It was a $5 million vehicle, and it's performing in the top decile at 3.7x MOIC. Fund two was then anchored by the family office, and we're at top quartile performance, 1.5x MOIC, and the vintages for those two were 2019 and 2021. We are now at the end of fund two and launching fund three next month. Currently, we're at 40 million AUM. We have multiple exits already and one M&A in progress. And then in terms of a portfolio overview, over 70% of our companies have 1 to 100 million in revenue already. We have 40 portfolio companies, over 10 scientific breakthroughs, and over 50 next generation therapies that address an addressable patient market of over 1 billion patients. On the left side, you see our track record and how that sort of compares to the median. On the right side are the drivers of the portfolio in both fund one and fund two. The one that's a bit darker with a 2.8x markup is one of the early exits. That still has room to run depending on the earnout milestones and can go up to 27x. The one that's 5.3x is generating 100 million in revenue already, and they're looking to exit in the next couple of years. And then a few others between 8 and 20x. And then on fund two, that's only 2 years old. So the step ups there between 1.3x so far. So the team, I come from a top 500 German family business. I'm on the board there and help the family office really go deeply into venture. What we did is we researched the most promising sectors, and we found that there is a convergence of deep technology, computational methods, and biology, as well as some other areas in deep tech, such as aerospace and defense, that are the most promising. And therefore, we launched this fund. I also had my own patient journey and learned about the gaps and the opportunities from the inside out. So I made it my mission to do everything I can to have other patients have a better experience. And Chris is on the call with us, so he will introduce himself.
It's great to meet everyone. I'm Chris, the investment partner on the team. I'm in charge of the deal sourcing, portfolio operational support, and technical diligence, and helping all of our founders with their midlife crises. I came out of academia. I was at Harvard and MIT, trained under Nobel laureate economist Mike Kramer, worked on the United States Agency for International Development Venture Fund. It's a 150 million vehicle. We had a 5x return on that, and was recruited over to Harmonix to build out our institutional due diligence process and practice, and plugged that diligence process I used on USAID into Harmonix, and used that in over 30 deals to date in building our healthcare, life sciences, and deep tech practices. And then my own background, classically trained scientist, triple advanced degrees in biology, nanomedicine, and an MBA, and published 3 books on healthcare and life sciences.
Yeah,
that's all.
Wow.
I don't even know if he mentioned he used to work under the Secretary of Defense, Ash Carter. So yeah, it's pretty incredible. And Cofield is our COO partner with over 30 years of operational expertise. She also used to be a top performing musician and is an ambassador for the Nelson Mandela Foundation. Anthony DeFeo joined us recently. He's raised institutionally over $1 billion at 4 different funds, 1 private credit, 3 hedge funds, and 3 of them in healthcare. And then Katya has started her own accelerator and venture debt fund, and is also helping us with partnerships, network, and IR. Then our incredible advisors, we currently have 6 of them, mostly PhD level. Paul McEwen, for example, has had 3 exits with really hundreds of millions in exit proceeds, and is one of the world's experts in life science tools. Mike Fenn used to run Harvard Innovation Labs, helping us with sourcing, due diligence, and portfolio company acceleration. And then the others, computational biologists, immunologists, neurobiologists, and medical doctors. The confidential one on the right is Campbell Murray. He was a former #2 at Novartis Venture Fund. So we became convinced that capital is not crowded at the intersection of these spaces, and that's tried and true, because in our proof of concept fund, we wrote smaller checks, and we noticed that we were able to get into pretty much all the deals, even with smaller checks. Now those checks have only grown since then. I think the previous panelist just mentioned there's 3,000 venture funds, over 1,000 across healthcare, life science, or deep tech, but only very few at the intersection of all of them. And with a purpose-built team that's capable of proper diligence and operational expertise, and even fewer with the top decile and top quartile performing track record. So what we do is we strike a balance between near-term results, product market fit, and revenue, and breakthrough potential. So still significant upside, but the downside is protected by existing product market fit. And we have cross-functional domain expertise between deep tech, healthcare, and life science.
When it comes to our investment practices, we've got 3 core verticals that we invest in: healthcare, life sciences, and deep tech infrastructure. We've identified this kind of new breed of hybridized compute-enabled platform company that's basically able to accelerate what we call the design, test, build, learn cycle. So it's the amount of research and development takes to bring a product or service to market. These companies are able to use computational platforms to accelerate that milestone and bring a product or service to market better and faster and cheaper. So what used to take 10 to 20 years for a scientific breakthrough or to bring a product or service to market in these areas can now be done in a handful of years in a far more CapEx efficient manner. And within these 3 practices, there's several subsectors that we focus on. These are areas that we have a track record of success in and continue to deploy capital in. So in our life sciences practice, we've invested across the spectrum in synthetic biology and biomanufacturing, computational drug development, tools and omics, and laboratory automation. In healthcare, I like to say we've automated everything that's on analogy. So that includes digital surgery, precision oncology, medical affairs analytics, clinical decision support, and clinical workflow automation. And on the deep tech infrastructure side, which comprises about 20% of the portfolio, we've invested in compute-enabled platforms across aerospace and defense, critical infrastructure, and advanced materials manufacturing. And when it comes to the investment criteria, we have over a 200-point checklist that we use and an extensive diligence process that we spend for each company. But there are fundamental aspects that we look for. As we mentioned, all of our companies are compute-enabled platform companies. So we're really keen on sustainable, accelerated milestone engagement. And for us, we're looking at emphasis on strong product market fit. Over 70% of our portfolio companies are generating between 1 and 100 million in revenues, which is quite substantial in an early stage fund, and has been a great insulator, especially in this market dynamic. And about less than 1% of the 6,000 deals that we reviewed have made it to investment. And we're looking at great operating teams, fundamental proof of concept, and most importantly, a sustainable, scalable business model. And when it comes to deal sourcing, every fund says they have a proprietary source. For us, we've got 3 buckets. We have over 40 founders in our portfolio currently. So we get a lot of excellent internal deal referrals from them. I think the best validation for a firm is founder referrals to other folks in their networks. The second bucket is co-investors. So we've co-invested with over 250 of the top investors, both domestically and globally, everybody from BlackRock, Sequoia, Google, Lux, TCBC, and Arch Venture Partners. And we have rotating quarterly calls with each of these folks, both for existing investments that we've placed with them, as well as future ones. And then the final bucket is the academic labs and governmental agencies. Work with over 15 federal and governmental agencies, including all 6 branches of the Department of Defense, NASA, and multiple other agencies. And then we have an affiliated network of over 100 academic institutions and laboratories. We've identified 25 to 30 ultra high put PIs and labs that are able to scale and spin out academic spin outs that we've backed up to date. And when it comes to the diligence process, we have an internal 7-stage, multi-stage process that we use for every deal. We typically spend 100 to 150 hours to due diligence for every opportunity that's invested. And this all culminates in a 30 to 50 page internal diligence memo that we share with both our investment partners and our scientific advisory board. This process is templatized and scalable. We've used it on over 30 deals to date. And one of the biggest elements that we're looking for is assessing critical kill points in a deal effectively and efficiently. We get 30 to 50 deals a week. And to adjust the signal to noise ratio, we had to have a really great institutional scalable diligence process. And we're able to accomplish this in a very streamlined fashion, typically 8 to 10 weeks turnaround for founders, so that we aren't wasting our time and we aren't wasting the founders' time when it comes to technically assessing the diligence on a deal. We have a few case studies across the portfolio. Happy to kind of give a high level overview on them. One of our latest investments we did with a company called BitBio. Their huge breakthrough is that they figure out how to manufacture any human cell in your body at scale. So that's over 20 human cell types that they can manufacture. We've been keen on breaking the mold on the binary risk outcomes in biotechnology. So this company is generating over 10 million in revenue, but has their own internal asset development pipeline as well. They spun out of the University of Cambridge in the UK. We came in on their post-Series A note with ARC Venture Partners, Foresight Capital, and then they subsequently raised 195 million Series B and Series B extension with Tencent and Porsche Family Office. This company was going to go public when the markets were frothy, but they continued to raise an additional up rounds privately and are looking to go public once the markets rebound. Another company that we backed out of Fund 2, Sourcero, they developed one of the first ever natural language processing platforms that beat the Turing test. So basically showed that their algorithm had semantic learning and cognitive capabilities that were on par with a human. They used their platform for medical affairs analytics. Unsexy, it's $40 billion. When we invested, they're doing about 600% year-over-year growth, on track to hit about 10 million in revenue, and we co-led their A. And they also have half of big pharma as their customers as well, of the top 20.
And Krish, could you just go a little bit deeper into how we helped each of these companies?
Yep. So for us, what makes us different is there aren't a lot of firms that have cross-denominational expertise between health and bio and deep tech, typically one or the other. So we built the firm as a supply-demand problem for founders that needed technically inclined investors that could help on BD, hiring, and clinical and regulatory strategy. So for these companies, we worked on everything from customer introductions, synergies with our own portfolio companies. A lot of our own companies are customers of each other's and use their own products. Worked on everything from fundamental market modeling and mapping, product launch, capital raise strategies, PR, et cetera. So it's quite the gamut. All the founders in perpetuity will always need help with the 3 core things of capital raising, BD, and hiring. So that's been something that we've been keen on assisting with. And when it comes to Fund 1, one of the cornerstone investments we made that proved our thesis of deep tech meeting health and bio was a company called In Silico Medicine. They developed the world's first fully end-to-end AI designed drug in clinical trials. They're actually currently in phase 2 right now. The big breakthrough is that it typically takes 3 to 5 years and $30 to $50 million to bring a drug into clinic. This company was able to do it in less than 18 months for under $2 million. So it was a huge paradigm shift in biopharmaceutical development. This company is so similar in archetype to BitBio, where they're doing over 10 million in revenue, have over $500 million in pharmaceutical contracts, and they have a pipeline of over 10 internal asset development programs that they're working on. Similar to Bit, they were going to go public when the markets were frothy, but they subsequently raised a 255 million C round and then a 90 million Series D round after we invested in the Series B round. They're also looking to go public when the markets rebound. And then another one is one of our earliest successes, a company called Volumetric. We invested in their seed round. Their big breakthrough is that they wanted to print human organs for organ transplantation. And basically what they ended up doing is printed out tissue scaffolds that you can test preclinical drugs on for toxicity. At the time we invested at the seed stage, they got bought out 18 months later in a 400 million M&A deal by one of their customers. So that was one of the first successful exits that we had.
Yeah, so that's almost a 3x with a total return potential of 27x. And then with Insilico, just to that everyone may be familiar with the old biotech model, but it usually used to be 1, 2, or 3 assets that people would try to bring to. And a company like Insilico has 10 clinical programs and preclinical programs. That's why they're also able to partner with all the big pharma companies and also generate double-digit million revenue already. And it really changes the risk reward and should make it more attractive to do biotech, life sciences.
Hey, Maximilian, we got about 3 or 4 minutes left. I don't know if you want to take questions.
Okay, I'll wrap it up here. So we haven't had any down rounds, which is incredible considering the vintage of 2019 and 2021 and the current market. No losses, multiple exits, and then the gross multiples are listed here. In terms of portfolio constructions, we'll do 20 to 25 positions at 500K to 5 million each into C to Series B company, primarily in the US, but also a bit outside, like UK and Europe and beyond. We have a co-investment program that'll be 0 and 10 for investors under 5 million and 0 and 5 for over 5 million. And then we're doing our first close between July and September. It's a 100 million target, and we plan to deploy it in 3 years. Just why now and why Harmonix? We've had 2 globally ranked top performing funds. We're at one of the most exciting intersections of biology and computation merging. We have a team with multidisciplinary expertise, and right now is a great vintage to invest with favorable valuations. Thanks so much, and we can go to questions.
Yes. So your company is you're based in Southern California, and you have offices in Boston. Is that how it works, or?
Yeah, we've been distributed since before the pandemic, so we have offices in Southern California, but we live all over the place, and we have boots on the ground in all the hubs.
Great. And so you are typically a co-investor on deals, or are you the deal sponsor?
We've led a few deals, and that really depends on the check size. So now, as we're ramping up our check size, we're going to lead even more deals, probably at least a quarter to half of the deals. But so far, we've led about 3 deals, and we otherwise select syndicates that are trusted, where we know who the lead is and what kind of value add they can bring.
Is there a restriction on the size of co-investment from LPs?
No, actually, that's oftentimes we get 5 to 25 million in co-invest. That so there's a lot of room to run in terms of co-investment appetite.
And you preserve rights until Series B or beyond?
Yeah, but oftentimes we operational help these founders and management teams and build relationships with them. So even if we don't have contractual pro rata, which we most of the time have, or a super pro rata, then oftentimes they'll still make for us.
I've got time for one more question here. Yeah, Rob?
Yep. Thanks, Max. Question, are the opportunity sets on management teams, are they more lift outs from corporates or entrepreneurs? Can you speak a little bit about that?
Yeah, so some of the earlier stage opportunities are university spinouts or not a government agency or something like that, or the incredible technology that just hasn't been commercialized. But oftentimes it's also just companies that are already generating revenue at the seed stage, Series A, or even Series B. Yeah.
Fantastic. Eric Singer, do you have a comment? Because I know you're in the healthcare space.
I'm just curious that, on the, you seem to have a criteria of having computational companies who already have revenue. Will you look at a non-revenue company if the technology is sophisticated enough?
Yeah, we do. Chris, you can to tell them a little bit about like POC and whatnot?
Yeah, so for us, part of the diligence is assessing how we can operationally support the company as well. It's quite a heavy lift on a lot of these companies that are building out the tech architecture while trying to scale the business model. So there have been companies that, especially in the life sciences side, that we've invested in pre-revenue, but the validation valuation being a 1-to-1 ratio. So we're pretty keen on making sure that the company is well insulated for the next round of financing, valuation-wise. And most importantly, how can we best support the scientific and technical build out of the company and help the management team scale?
Yeah,
and just one follow-up question. Sometimes when you have life science entrepreneurs, they're disciplined in biology, and not as disciplined in computational, and it's sometimes viewed as two different skill sets. How do you cross that bridge?
Yeah, that's a great question. And I think that's the problem with the investors that we've noticed a lot. A lot of them don't have the cross-domain expertise, so they're kind of bucketed. So for us, a lot of our teams balance both ends quite well, both on the traditional asset development pipeline and understanding how to bring an asset to and through clinic, as well as on the tech architecture side. So the teams are quite robust on the engineering and science side. For us as investors, it's still at the end of the day, it's great that you're using compute and everything, but the market's only going to value still based on the assets that you're developing. So we've been really keen on making sure that we're able to hit, these milestones faster and more efficiently with the compute platform, but still we have to have best in class assets at the end of the day, because that's
fantastic.
How do we
Eric, I gotta cut you off. You're gonna have to talk to Max. Maximilian will be at dinner. You're gonna be at dinner.
Okay.
Great. So Max, you can talk to Eric at dinner and go through all this stuff. The whole thing of AI in healthcare is a big deal. So thanks so much, guys. Great job.
Thank you.